Right, morning everyone. Welcome back to Morning Kappa. I'm Joseph here. So looking at the last two sessions on the Hong Kong market, we can see that the Hong Kong market experienced a mild profit taking. The Hang Seng it printed two um, long upper shadow, right? These have shows that the profit taking is happening right now. Um, Hang on. Now, meanwhile, if we take a look at the overall market heat map, right, we could see that the Alibaba have give a 12% return over the week, right, and followed by Kuaishou about 10%, right. Towards the end of the week, right, 981 SMIC also staged an upside breakout. But the most disappointed stock over the week was the Trip.com 9961 that the Chinese authority have launched an investigations into this company, right? Despite that, I just look at the foreign broker, most of them still maintain a buy call on the 99861. Meanwhile, apart from the Alibaba 9988, we can see that sister company, Alibaba Healthcare 241, also have jumped by 20%. So last week, we do have these two counters on our trading stocks, 9988 and followed by 241. This week, we'll be looking at the just breakout stock 981 Semiconductor Manufacturing International SMIC. Looking at the stock, it have climbed above the 77 Hong Kong dollar. Next R1 is 85 and followed by 93. Downside support is at 68, right? And secondly, we have the EV player Xiaopeng Xpeng 9868, where the counter also about to climb above the resistance 82, right? So if the breakout happen, right, Xiaopeng will be climbed towards 87 and followed by 93, and downside support is marked at 77. So we have one breakout stock that we can buy high and sell higher, followed by a pullback, pending breakout stock, which you can buy lower, post for a technical breakout. Right, looking at the S&P 500 still consolidating, moving sideways below the 7,000 mark. So on the downside, 20 days moving average will be a support for the S&P 500. And I think over the week, one piece of the biggest news is that Trump decide not to interfere on the Iran situations. And but what we do see is that after his tweet, the oil price have tanked to below $60 per barrel, right? But meanwhile, the U.S. market continue to show a bullish setup, boosted by a very strong earnings from the banks. I think now we are coming into the quarter four earnings season of the U.S. Companies. What we're looking forward to is that what will be their guidance for the 2026, any change on their earnings outlook. So that's something that we'll be look forward to. Nevertheless, over the week, right, we can see that the at AMD have led the fab players. It went up by 12%, right? The AMAT went up by 13%, and then the Awago rebound by 4%, Intel 12%, right? The FANG stocks, Microsoft, Nvidia, Tesla, Google, Amazon, right? These big FANG stocks have actually moved into a consolidations last week. One of the interesting counter was Walmart actually went up by 6% over the week. Not only it went up, but it also attract a very strong volume over the week. Meanwhile, the memory counters, Micron as well as the SNDK, right, continue to charge higher, right? So I think a few counters that we should pay attention to. Firstly, the Micron. You can see the trend continue favors on the upside, and applied material, right? Apart from the Lam Research, I think we can actually look at the applied material at this juncture. You have a break past our R2, which is a $300, right? So this $300 has become from R2 has become an immediate support. As long as stay above this 300 level, right, the applied material should move on a higher high basis. Now, secondly, we have the oil and gas company, which is Schlumberger, SLB, right, also a break past the 45 Hong Kong US dollar, right, and R2 would be, R1 and R2 is actually at 48 and followed by 51, and now support stop loss is at 42 US dollar. Now, over the week, our FBM KLCI have posed a very strong technical setup. Right, it have managed to climb above 1685. Right now, it's trading above the 1007 territory. So last week, the most bullish sector was the financial services. Went up by 3.4% and followed by the tech. So I think that for the 2 consecutive weeks, our most bullish sectors still the financial and the technology. Meanwhile, the plantation, constructions, and healthcare continue to experience selling pressures last week. Right, so at this juncture, you can see that clearly FKRI, right, the upside was blocked by the 1730 resistance, but the overall momentum remains constructive right now with our stop loss set at 1650. Meanwhile, the FCPO, despite that the MPOB data show sluggish exports, the FCPO managed to stage a very strong rebound thanks to the strong rebound on the peers, which is the soybean oil on the last Friday. Right, you can see that the right now resistance is 4001 and followed by 4180. Right, so as long as the FCPO stay below 4180, best we have a technical advantage. Right, and over the week, I think one of the most topical stock is actually the Gamuda. You can see that Gamuda last Friday it have a very long lower shadow, showing that the buying interests have emerged somewhere at 4 ringgit and 70 cents. Now, based on the technical pictures right now, I think the chart will looks more bullish if Gamuda climb above 5 ringgit. So at this juncture, right, it may go for a counter trend rebound, right? But the immediate resistance remains at the 5 ringgit level. So last Friday, what happened is that the PNB have announced confirmed they are going to launch Sukuk, and apparently Gamuda is one of the counter that pledge into the bond. And hopefully after the announcement of this Sukuk, right, selling pressure is more subdued on Gamuda. If the selling pressure get lessened, I think the upside momentum should follow through, right? So for Gamuda, 5 ringgit and 470, these two level is what we'll be looking at for this week, right? And apart from the Gamuda Constructions counter, we have one more tech stocks, which is THMY. Riding on the new waves of the tech stocks for the past 2 weeks, you can see that the THMY have been moving up steadily. Now, I might have a technical piece on the THMY, I think last week. Right now, the stock have breached the 1 ringgit and 5 cents. Moving towards 1 ringgit 15 cent and followed by 1 ringgit 20 cents. Now, this kind of stocks, just want to remind everyone that once a stock move above 1 ringgit, now every bit is going to be 1 cent, which is 1%. So for the stock that trading between 1 ringgit to 120, usually their momentum will be very strong. Right, so THMY is what we'll be looking at this week in the tech stocks. In terms of two more trading idea this morning, firstly, we look at Pavilion REIT that also break past 1 ringgit and 95 cents. So after the breakout, Pav REIT is going to look at 2 ringgit 5 cents and followed by 2 ringgit and 15 cents. Downside support is 1 ringgit and 85 cents. Secondly, the tech stock Franken have climbed above the 21 days moving average, testing the 4 ringgit and 25 cents resistance. Breakout will lift the front can towards 4 ringgit 40 and followed by 4 ringgit 55 cents. Downside support is 4 ringgit and 10 cents. So we have one REIT counter, Pav REIT, and followed by one tech stock, front can in our trading stocks report this morning. So I'll stop here and pass on the stage to Yong on the weekly economics update. Rasa Mingguan. Thank you.
Thank you, Joseph. Thank you. Let me share my screen. Yeah. So morning everyone. Thanks for joining the call. So for the econ side, we see that the risk sentiment index is continuing to pick up. So we can see that in our RHB risk sentiment index in the blue color line has shows a continue improving momentum, and this suggests that the risk appetite and also the rally momentum in the US equity are picking up. So for now, we still expecting a risk taking into firm coming to next week, supported by global lower global rates expectations and a potential cut as early as second quarter of 2026. And we can see that the some growth link indicators, including gold coppers ratios and VIX, has generally trended lower since December 2025, with both see the mild uptick recently amid the geopolitical tensions in the US, Greenland, especially in the Middle East, and also some Fed related concerns. So we view this risk as largely short-term noise, where the goals in the strength in gold recently reflect a temporary risk aversions, but expectations for future rate cut and weaker USD could continue to push the investor toward a credible store of value. Still, the safe haven demands remain relevant, amplified geopolitical headlines and ongoing unrest in Middle East. We are also monitoring the investigations surrounding the Fed Chair John Powell, where market participants is potential undermining the Fed long-term policy independence. So looking at the data itself, we see that U.S. economy still slightly resilient with the inflations remain low, but is pointing downwards but still remain elevated. So they are decelerated, but they are not out of the wood with the core PPI is coming to the 3% point, and also this is the fastest since July 2025. Separately, so investors also looking at China and at their stronger than expected exports in December, and also this has fueling their strength with US dollar CNY below 7, and also the stock has passed through 4,100 handle. So other than that, looking at Malaysia part, we have also published a report on Malaysia GDP. So we can see that in the fourth quarter, GDP is a number that at 5.7% is way higher than our in-house estimate of 4.6, and also the consensus forecast of 5.4. So we think that this is driven by a stronger than expected growth in manufacturing, service, and agriculture. So overall, if this advanced GDP to be realized at 5.6, 5.7, so overall economy will expanded by 4.9 in 2025, and this is exceeding our in-house projections of 4.7, and also above the official projected range of 4 to 4.8%. So we continue to maintain a 4.7% for 2026 this year versus the official estimate of 4% to 4.5, anchored by a stronger domestic demand, the relative sanguine external outlook, and also supportive government policies. So that's all from me. I will pass on to next speaker. Thanks, everyone.
Sorry, can you put on the virtual background for me again? Thanks. Okay, if not, I'll just proceed with our sector update this morning on consumer sector. Essentially, we maintain our overweight call on the sector, And this positive bias is very much in line with the broader market strategy, which is to prefer names with defensive qualities and domestic-centric earnings. This is to avoid the prevailing external risks. We expect improving liquidity to also sustain the bullish sector sentiment and support a further valuation re-rating. And in this report, we raise our valuation for Nestle, 99 Speedmart, and Farm Fresh, as we expect the promising growth outlook to continue garnering investors' interest. Essentially, we believe the sector will continue to provide a defensive shelter by offering earnings visibility amidst the market volatilities. This is thanks to the domestic-centric earnings base and resilient consumption, and fundamentally the rising prominence of SARA initiative as a fiscal tool should direct more spending to the sector. Although we highlight the risk of more competition this year as the government is looking to add more small retailers into the panel list, and if the fresh produced products were to be included, then the market share could be further deconsolidated. The petrol subsidy rationalized approach has removed a major overhang to spending and inflationary risks, and the recent pledge to not reduce the quota based on income levels would also be positive for the sector going forward. Other sector catalysts that we can highlight will be the stronger ringgit, healthy wage growth with the second phase of civil servants' salary hikes coming into effect early this year. And of course, Visit Malaysia will be key to lift footfalls of the retail industry. Meanwhile, on the other hand, we highlight the easing commodity price trends and ringgit strength to translate to lower input costs and better margins for food manufacturers going forward. And lastly, I think if you read the news, the recent announcement of the lower SST rate for rental services at 6%, as well as the higher threshold for exemption, is a relief to consumer retail companies, as it will potentially save them 25% of the incremental rental expenses incurred from the SST expansion effective second half of last year. With regards to strategy, we think the main beneficiaries of government fiscal policy will continue to be favored by investors. This will include 99 Speedmart and Nestle, although valuation is a key to determine whether the positives are already in the price. Meanwhile, we highlight Farm Fresh robust earnings growth and expansion headroom in the regional market, and this should keep the market excited. On the other hand, there are a few quality consumer retail players trading at more reasonable or undemanding valuations, including EcoShop, DIY, Aeon, and Focus Point. And we believe this is compelling, as discretionary spending could pick up in tandem with the improving consumer sentiment ahead. And lastly, for Visit Malaysia, here we will highlight Visit My News and the two brewery stocks, Heineken and Carlsberg, as the sector proxies to capitalize on the rising tourist arrivals. So all in, we maintain our overweight call on the sector. Our topics of the sectors include Nestle for the big cap, Farm Fresh and EcoShop for the mid cap, and Aeon and My News for the smaller caps. Let me stop here and pass on to Adam. Thanks.
All right, thank you, Siang. Today we have a company update on Binastra Corp, which announced that it secured a 1.2 billion contract from Exim for the Causeway Square project in Johor Bahru, very near to the Bukit Jaga RTS station. And this is the largest single ever contract that Binastra has clinched, in their history. And on a year-to-date FY26 basis, they have now secured about 3.4 billion ringgit of new jobs versus our internal job win target of 4 billion ringgit. So that means the group needs another 600 million ringgit to hit our target, and we believe this is largely intact, with 2 more weeks left before their financial year end of January. This could likely come from a mixture of either Johor or even Klang Valley projects, in our view. And in terms of the balance order book, it has now risen to 5.8 billion ringgit, which is a record high. But moving forward in the very long term, we do still think that Johor has a lot to offer to Binastra, given that other clients such as Maxim Global is also developing their own project at Taman Pelangi, with a GDP of about 1 to 2 billion, if I recall correctly. And not to forget, Exim has about 6 to 7 acres of land opposite the New York Hotel, which also may present opportunities, construction opportunities for Binastra in the future. So all in, we make no changes to our earnings estimates as the latest job win is within our job win target assumption, maintained by with an unchanged target price of 2 ringgit and 69 cents. We continue to like Binastra, for its steady job flow trends. So that's all for today, everyone. Thank you for dialing in into RDB Morning Kappa at 8. We will see you tomorrow at the same time and same place. Take care and have a good trading day. Bye bye.